the junk mail.
Oh,
It went to
weird.
my spam. I'm like, so.
Hey, here we are. Good afternoon. It's Chris and Corey Harder with Homes by Chris Harder and Chad Brown.
Oh, wow.
We are live. Don't mess around.
We're live.
Things
Good.
have
I
gone-
apologize. I didn't know we were live.
Nope,
I didn't
just
either.
did it right when you got on because we have a limited amount of time today and we want to get some good content out there.
Chris is not
how's
messing around
everyone
today, Chad.
I guess, man. I tell you what, I'm on a call and I love this guy to death, and he's super smart, one of those guys, and just kept talking, and my brain quit working about 30 minutes ago. But so I apologize for being a little bit late to the call, but it is what it is. It happens. So
Absolutely. You can put together the best day, the best day you can put together, and it just always doesn't work out that way. So
yeah.
So we're going live here. Chris got us going early, right on time, I guess. Thank you for that. But we're Corey and Chris Harder. We are Homes by Chris Harder. We are real estate investors. We are realtors. We do pretty much everything real estate. We are involved in all of that. And we're also here with Chad Brown, who is a CPA, owner of Kistler Brown Companies. And he always has some good wisdom to share with us, whether it's with the tax world or just reality in general, motivation, what gets you going every day. So we've had some really good conversations over the last few weeks.
Hey,
I think Chris has a couple questions.
Yeah, I was talking to somebody and we were talking about kids and taxes. Like, our kids are in high school and they're getting older and they're getting jobs. So I guess it's a two-part question. One is, how long can we claim our kids? And then the second part is, when they start working, like what amount or what's the minimum or when do they start paying taxes? And then if they're paying taxes on their own, do we get to still claim them or not?
Yeah. No, that's kind of that's multiple facets to that question. So the overarching rule is you can claim your kids up until they turn 19 years of age. Okay. Assuming that you're providing over half their support, they're living with you, or kids don't have to necessarily live with you. If they're away for college, that's considered being under your care still. You can claim them, right? Up until they turn 19. If they're 19 to age 24, in between age 19 and 24, you can still claim them if they're a full-time college student. So if you have a child that graduates from high school and goes to work right away, or starts their own business right away and doesn't go to college, they're 19. They're going to be claiming themselves, right? So, with the rules have changed. It used to be a huge deal with claiming your children, right? They took away the personal exemptions. You used to get exemption for yourself, your spouse, and each child. Now it's just a larger standard deduction that changed back in the Tax Act in 2017. The big thing with college students, and we see this a lot, is parents assume that their kids are going to college, they're working, maybe they're making $15,000 a year, right? Which is decent money for college, but it's not money to pay for school and live on. So you're still providing their support.
Sure.
You're also paying for their education in many regards. So in order to get that tuition credit, the American Opportunity Credit, you have to claim them as dependents. So many times I see kids claiming themselves and parents just saying, go ahead and do it. They're helping them out and they're losing that benefit because it goes with the dependency. So
it makes more sense in that scenario that we still claim them because they probably aren't making enough to make a difference in their life. Is that what you're saying?
Well, they're not making them. You're still supporting them, right? I mean, at 15, they're living on their own, going to college. You're still probably paying the tuition, paying over half their cost of supporting them. So in order to get that tuition and fees credit, the American Opportunity Tax Credit, which is a big deal, up to $2,500, you have to claim them as a dependent.
Okay.
Now, in terms of them having to file their standard deduction, all of us get a standard deduction, right? If you claim a child, they still get that $12,400 standard deduction. So let's just say you have a college student making $20,000 a year. You're still providing over half their support. You're paying for their college tuition, food, room and board, that sort of thing. Their standard deduction is $12,500. They make $20,000. They have $7,500 of taxable income. $7,500 of taxable income. Tax on that's going to be 10%, federal wise. Okay. That credit may mean a lot more to you than it does to them, right? So you still claim them and they're still going to end up paying the same. Now, if they were paying for their school, taking out student loans, that sort of thing, maybe they claim themselves and they get that credit themselves. So,
that makes sense.
Yeah.
This is
kind of a long-winded answer. I think I hit each facet of it, though.
I think you did. There's kind of another part that's in my mind, and we've talked about it when you're doing investing and different things and taxes and how you can pay your child up to X amount, per year.
Right.
That might be more financial planning, or can you talk about that?
Yeah, so there's a huge tax benefit if you're a business owner that you can pay your kids, right? And you don't have to pay the FICA tax on that like you do your other employees, which is a huge benefit. But you can pay them the standard deduction, and don't quote me on it, it's $12,450 last year, I believe, or $400. This year it's $12,500, somewhere in that ballpark. If you paid them that amount of money, they're not going to have any tax exposure, right? Because $12,500 is their wage that you paid them. Their standard's $12,500, no tax. It totally wipes away and they have no taxable income. But you as a business owner, say you've got 2 kids, you just deducted $25,000, you're in the 30% tax bracket, that saves you $7,500. 30% of 25,000.
Yeah.
So that's a huge. Now that they have to work for you.
Right.
I mean, if the IRS were to come back and say, "Oh, little Johnny's, not working, but you're paying him," they could come back and reclassify those wages, and you have to pay penalties and stuff.
So what would you do to record that? Is that part of your bookkeeping? I mean, do you
just like any other employee, they clock in, or you manage their work. You can pay them X dollars an hour. That's a reasonable hourly rate for the work being done. If you're paying them $20 or $1,000 an hour and they work, 12 and a half hours a year for you, that's probably not reasonable based on their skill set, I'm guessing.
Might be a flag.
But that's a big planning vehicle.
Yeah, because we actually do, running our business, we do have both Mia and Regan doing some mailings and, tasks, I guess, if you will.
Yeah.
Probably doesn't amount to a ton, but if there's some ways that we can utilize that and save us some money, save them, that would be great.
Yeah, no, it's a fantastic tool, and if you get payroll set up already, it's pretty easy. But it is W-2 wages.
So then, I guess this would be my next question. A lot of entrepreneurs, investors, things like that today use virtual assistants, where a lot of them are overseas. Most of them are overseas, and you pay them through a Payoneer, or I don't know, some may Venmo, I don't know, but can you write that off if you're paying somebody to do work for you, like over in the Philippines or wherever it might be?
Yeah, 100%. Yeah, a lot of times that's handled through an intermediary. So you're paying the intermediary, and then it's transferred over to the, remote worker, so to speak. But
Right.
yeah, that's definitely deductible. And it's becoming more and more popular. And it's almost, I speak from experience, almost a necessity of business
No,
anymore. Yeah.
absolutely. We've had a VA from the Philippines for, I don't know, 2 or 3 years now, and they do very good work. Very conscientious people. It's a fantastic culture that they have over there. I'd love to visit sometime, just by getting to know our VA a little bit. And um,
Yeah.
especially in today's world, you need responsible people that can do good work. But anyway,
Yeah, no, 100%. It's deductible. Sure.
so that's interesting. So what else you got, Chris? Anything else?
No, but I do want to touch on this VAs. Would you ever consider something like that, Chad, for your business, to do some handling of things, or is yours more face to face? And
Utilizing a VA?
Yeah.
No, it's something we're exploring. Right now, I mean, we have in-house employees. I'm trying to figure out what role the VA would play. Our biggest need is, I would say, more of a technical fitting what we do from a bookkeeping standpoint, and we are utilizing outsourced bookkeepers to perform some of the work, our bookkeeping work that we do for clients across the country.
Well, everything's online now. That I can
Yeah.
almost everything remotely anymore. It's amazing. The technology.
Yeah, and as long as you have protections built around, the work that you're doing, it's really secure, fail-proof. So it's something that, with the challenge that a lot of business owners, at least everyone I talk to, and I'm sure my circle is no different than your circle, everybody's struggling to find good quality folks to come in and work, especially inside the office. I think I read that 52% of the businesses now have some form of hybrid workforce. So I'll tell you, for instance, in the work that we do, we're using someone that is an accountant or a chartered accountant from one of the big 5 CPA firms, Ernst & Young. Doesn't work there anymore, but all of the large CPA firms, the national firms, have offices in India. All of the tax research, QuickBooks, Intuit, all of these folks have offices in India. Firms are now outsourcing all of their personal or business tax preparation because they don't have the internal capacity to handle their clients. These are accountants just like me, just like anybody else, with a high degree of skill that are providing services in a very easy, efficient, and I would say hassle and drama-free way.
Yeah.
That everybody's doing it. Everybody is starting to use VAs and outsourcing a lot of work overseas.
No, I think it's a great option. We've had real good success with it, with our little bit of exposure to it, and we'll continue to work with VAs and probably add 1 or 2 more here in the next 6 to 12 months too, because it's just, they are very specialized. They are very good at what they do, and very dedicated employees is what our experience has been. So
yeah, no, it's a growing trend out there. There's actually CPA firms that are contracting with companies overseas, Philippines, India. They've actually started companies over there to outsource it to other folks. So they've got connections over there because they've been using it for a while. They bought the company in the Philippines. Now they're outsourcing it to all their clients. So it's crazy. But hey, I wanted to ask you guys, I noticed on Facebook you were out in Colorado. Is that just recently?
Yes, we were.
Wednesday, Thursday,
Tell me
Friday,
a little bit about
we
that.
were masterminding. in
Evergreen, Colorado. Jamie and Brad Flanagan are real estate investors, agents here in the Nebraska area, Colorado, Arizona, who knows where else, but they're very, very successful individuals. And we got to go out and spend 2.5 days with them out at their house in Evergreen, Colorado, which is about 8,000 feet up in the mountains.
Oh,
Just
wow.
absolutely beautiful. And we sat in their house and worked from 9 in the morning till 6, 7 at night, grabbed a bite to eat, and we were still working. So didn't even leave the house for about 10 hours each day, I love that stuff. I could do real estate, and not just real estate, but entrepreneurship. You share different ways of doing things, and you know how that works. You've done a lot of that. Yeah. It's
No,
a beautiful
that's
city
yeah,
too.
Brad is a lender, and Jamie is a real estate agent, and they both together invest and flip. And they actually out in Granby and Winter Park have 2 Airbnbs in Colorado. So they have some there. They have one in Arizona, I believe, or maybe I think they rent out a house in Arizona. So I don't know if that's an Airbnb, but they just rent out a house. And then in Omaha, they have over 50 properties, rentals and short-term. Like they work with the traveling nurses and place them. I mean, they're just multiple streams of income, right? So that's what we're looking at to learn.
Do you guys work with the investors that are looking to get into rental properties, help them find the right properties to get it? Maybe somebody that doesn't know and they're afraid to buy a property and say, oh, the rent's not gonna be enough to cover just kind of help transition them into that space.
Absolutely. We love to do that. In fact, we have worked with some out of town investors, even Chris, just like California. There's a couple other states that she's worked with, I know, in the past. And no, we love working with investors and helping them work the numbers and see if it makes sense. And, find out what kind of properties they like and, what kind of returns they want. We've done that quite a bit, actually. So
there's definitely a formula, and I think everyone really jumped in when the interest rates were low and buying up all these properties. One negative is we have people from California and other countries, buying up all our land and our properties. So it makes it hard for just the first-time home buyer to buy a home. But lots of people need rental properties too because they don't have good credit. But I think a lot of these investors jumped in with this low interest rate, but they didn't really have a formula. Like we have calculated out kind of a per square foot, what it might take to rehab these places, whether it's the flooring, whether it's replacing kitchens, bathrooms. If you run into, like our last one, run into the HVAC, run into some pest control. I mean, there's so many things that they need to know and to learn about. They just think, hey, we're just going to buy this house and throw renters in there. And that's not always the case, but they do need to know that percentage too. So it cash flows.
Right.
What is the going rate for rent and what people are willing to pay and what happens, if you have a vacancy for a few months, then what do you do? And so, yeah, there's a lot to it, but we absolutely would work with others.
Okay. Good.
Yeah. So
Fantastic.
Well, I think we're going to make this a short one today. We've been running more Facebook ads and things, and I actually have a conference call with the Facebook Meta Ads team. It's pretty cool when you start running more Facebook ads. They'll actually reach out to you, and these experts with Facebook, you get like 45 minutes every other week with them, and they will help you run your ads better, be more strategic, make sure they're set up correctly to get to the right people, and just little tricks and trades of running ads. They can get expensive, and if you run them right, you get good returns. But sometimes you need that extra help. So I'm really excited.
Yeah,
this is my second call. So yeah, it is
Yeah, no, that's fantastic. Yeah, you gotta, especially if it's coming from the horse's mouth, so to speak, because like Chris was saying, it's always changing, and you might be throwing money in a bucket, and there's a hole in the bucket. So
right.
Yeah. That's the biggest thing with advertising, especially Facebook. Google, things like that. You need to stay on top of it. Absolutely. So I'm kind of excited for today's call as soon as we hang up here. So
Well, good deal. Yes. Well, I appreciate the
Thank
time,
you,
guys.
Chad.
thanks,
Yeah.
Chad. Appreciate it. That's
Always
Chad
enjoy
Brown
it.
with Kessler Brown Companies, CPA here in Omaha and Council Bluffs. You can reach him at 712-352-2505. And we do appreciate your time, Chad. Thank you very much.
Thanks, Chris. Thanks, Corey. Appreciate it, guys.
Take care, guys.
We'll talk soon.